Real Finance has brought Wiener Privatbank into its on-chain access plan for institutions. The deal matters because the bank is not just a name. It is assigned custody, reserves, and euro asset origination inside a regulated setup. Real Finance Teams is the hook because the confirmed event creates a specific pressure point. The partnership places client funds in EU-regulated accounts and maps operations against MiCA, KYC, and AML requirements. The measurable anchor is $50 MVP, and the story turns on bank rails rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The minimum viable phase targets roughly $50 million in on-chain assets at launch, with a pipeline goal above $500 million after mainnet. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Real Finance and Real sit inside a process where asset pipeline can change the readout. The baseline also defines the boundary. $50 MVP is usable evidence, while anything beyond asset pipeline still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where Real Finance Teams becomes useful. The model connects familiar bank controls to the real blockchain, so qualified institutions can touch tokenized assets without losing compliance structure. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is MiCA path, which is why $50 MVP is a signal rather than decoration. That is why the segment spends time on MiCA path before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Institutions get clearer counterparties, reserve oversight, custody rules, and asset origination instead of a purely crypto-native access route. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to real and real finance, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. A euro-denominated stablecoin is only under discussion, with no committed launch date and more regulatory structuring still required. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is real mainnet launch and whether the first assets actually move through the bank-backed pipeline. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need real finance or relevant market participants to show follow-through around asset pipeline, not only reaction around real. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for Real Finance Teams is concrete. The next signal is real mainnet launch and whether the first assets actually move through the bank-backed pipeline. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect $50 MVP to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to $50 MVP, bank rails, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.